oil prices are falling on a plan for US President Joe Biden and Russia's Vladimir Putin to hold a summit on the Ukraine crisis. The office of French President Emmanuel Macron said in a statement he had pitched to both leaders a summit over security and strategic stability in Europe, and the White House responded that Biden had accepted the meeting in principle, but only if an invasion hasn't happened. Brent crude is now trading at $92 a barrel and WTI at $90 a barrel. Oil markets have been jittery over the past month on worries a Russian invasion of its neighbor could disrupt crude supplies. But price gains have been limited by the possibility of more than 1 million barrels a day of Iranian crude returning to market. A senior European Union official said on Friday that a deal to revive Iran's 2015 nuclear agreement was very close. So for more on this now, let's go to Naeem Aslam. He is Chief Market Analyst at AvaTrade. Naeem, many thanks for being with us this morning. First of all, how long do you think oil prices will be this volatile?
Thanks for having me. So basically, oil volatility is based on two different factors. Number one is geopolitical tensions, which we are currently seeing and that you mentioned earlier. And secondly, supply and demand equations. And both of these equations have been out of whack because of what happened with COVID, several variants of COVID, and they are very much the main denominator in determining the prices.
That's interesting because any addition of oil would really help at this point, as you say, to help the second factor that you're mentioning. But analysts have warned that if a Russian invasion takes place, Brent could spike to above $100 a barrel, even if an Iranian deal is reached. Do you agree?
I think the spike could be in a short term because, as you correctly mentioned, Iranian deal is a very important and a major factor. And Iran's excessive supply that it can bring on the market, that is going to play a very dominant role. So yes, in the short term, we could see the prices spiking, but the fact that Iran can actually bring extra supply on the market, given that those sanctions are eased off, I think we should see these prices coming off from their highs. I mean, earlier today, we've already saw crude oil violating an important support level of $90. And that, to me, is a sign of a little bit bulls losing control of the price action.
If we try to see through this volatile period, and assuming no major disruption to Russian supply, how would you describe the fundamentals of crude oil markets? And what do you think would be the price that would balance demand with supply?
Sure. So let's say that if this entire geopolitical tension or situation begins to de-escalate and we see this risk abating altogether, then what we're going to see from there onwards is the prices where they are as of today, they are incredibly high for two factors. Number one is the demand for fossil fuel isn't there. Secondly, renewable energy or renewable energy sources are very much in demand. For instance, back in the UK or in London, out of every 10 cars in the city centre, 6 of them are either hybrid or fully electric. So where are you going to see that supply coming back? So, I mean, why do you need that much supply? So that is a very important factor in terms of a price action. So I think, and even at $80 or $90, prices are too rich, given that we do see de-escalation of these tensions.